Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 18th of February. Just to give us a slightly longer view on the FTSE, just because in the recent past, as you can see, we've been going absolutely nowhere. So it's a random walk between 7,300 and 7,800, which doesn't really help anyone. But on the longer time frame, going back to 2007, those happy days before the global financial crisis, the top of that channel from 2007 is heading to 8,500, which is obviously a potential target for this market if we can stay above the recent support zone in the low 7,000s. Homing in on the actual FTSE itself, recent price channel from back in August, top of the channel there, heading for 78.30 at the moment. Good end of week close with a bear trap rebound from below the falling 200-day moving average, which is, I suppose, quite a signal. And hopefully we'll get 78.30 by the end of this month, and we can maybe try and imagine how quickly it will take, how quick we will get to the long-term 8,500 target. On the downside, below the 200-day line, 75.40, the risks are down to 74.40, but obviously with the end of week close so strong, it looks as though that won't happen. Moving on to the DAX, and here we're making good ground above 17,000, which we spent about 10 or 15 times trying to get through at the end of January, beginning of February. Current situation is above the floor of the rising trend channel from October at 16,900. We're looking towards the top of the October channel, just up to 17,900 by the end of next month. Worst case scenario at the moment is a dip down to the 50-day line, 16,700, and we're back by the rebound for the RSI at or just above neutral 50, which is a good continuation signal. Moving on to the next market, which is the Dow, and here we've sort of cooled off slightly, but good support established there at the floor of that rising trend channel from October, and 38,000 as well. While we're above that, looking for a break towards 40,000 by the end of next month. Obviously, you can see the top of that channel heading for 40,600, which seems like it's a little bit optimistic. On the downside, initial support there is analogous to the DAX, 37,600, and the 50-day line, RSI at 58, which is in a good place for further gains. Moving along to Bitcoin, which has been was one of the stars of the show last week. Current situation is that we've got a few people getting a little bit giddy in terms of the gains, but we hit the top of our rising trend channel from August ahead of time, so that's now currently around 53,000, end of day close above 53,000. We're looking for 60,000 by the end of next month. In terms of the downside, favored levels, obviously the old January resistance of 49,000, and then below that around 46,000, which was resistance on, well, actually support on the way up recently. If we're really unlucky, I suppose the 50-day line at 44,000 is there, but that's obviously rising and not much lower than our 46,000 guess at support. Going on to gold, and here it looked for one point that Bitcoin's gain was gold loss, but so far we bounced a little higher than we feared, i.e. we could have bounced or could have headed down to the 200-day line 1983 or the floor of that rising trend channel from March last year, now just below 2,000, but we bounced on the 2,000 mark, still waiting for either an end of day close back above the initial February support around 2030, or breaking that line of resistance from December 2060 to give us a move to 2100 by the end of next month. Moving on to the stocks, and starting off with a rather unusual selection here, Biome Technologies, and here a strong rebound off the floor of that rising trend channel from April last year. That's also the area of the 50-day line at 105, and basically closing almost exactly on the 200-day moving average, just a shade below that. End of day close above the 200-day line there at say 128 could be enough to take us up to the top of that rising trend channel from last year, as high as £100.85 by the end of next month. Obviously it's a punchy call, but we did manage to close above the top of that gap there from November, so it is quite a strong technical setup. Next up is Beeks, which Had a bit of a consolidation last week. Looks as though it's poised within a rising trend channel there near the highs. Golden cross as well last week between the 50 and 200-day lines. And so the overall picture here is that we're looking for a move as high as £1.90 rather, at the top of that broadening triangle from May 2022. It's a resistance line projection from that time, and the upside value while we hold above £1.45. Recent support. Next up, a stock which I don't normally look at because it's a rather bigger market cap than most of the ones we focus on here, but looks as though Cab Pigments is about to do the first target there, around £1.17 at the top of that rising trend channel base from October. Above 117, we could be looking at as high as £1.58 by the end of April at the current rate of progress. Obviously, need to see the shares down the right side of £1. Next up is Deltic, which we did give coverage, or we do give coverage to quite a lot. Here it looks like we're finally breaking out in a meaningful way. We've broken the initial February resistance at 32 pence. We've hit our initial target there at 34. Above 34, looking for 46 pence by the end of next month or even sooner. Nice U-shaped or saucer-shaped turnaround there after lots of attempts at a sustained rally. Now onto a name which has been a rather volatile market, and normally is a rather volatile market even at the best of times. Rising trend channel base there for GCM Resources. Looks as though we've found support there at the floor of the channel around 1.9 pence, and a nice close there at the end of the week on the 200-day line. We're looking for up to 4.3 pence as soon as the end of April, maybe even sooner than that, while we remain above recent 1 3/4 pence support. Next up is Jarvis, and here it looks as though things are shaping up, or have been shaping up quite well. We've got a rising 50-day line near the low. We managed to close above that on Thursday and made progress on Friday. The longer we stay above our initial target there at 74 pence, the greater the chance of a move to 95 pence and the upper parallel, that rising trend channel base by the end of next month. Can't resist looking at Microsalt on the basis of all the gains that we've seen. Has been a real flag bearer for the bulls over the last couple of weeks. Here you can see that we managed to close above the initial target, even initial best case scenario target, 107, top of that rising trend channel from earlier in the month. Above 107 on an end of day close basis, we could be looking up to £1.36 and the upper parallel of that trend channel by the end of next month, or obviously a little bit sooner. On the downside, we'd like to see the shares remain above 90 pence, whatever happens. Moving on to Poolbeg, where Carl Friel stepped up to the plate, and the shares are also stepping up to the plate. We've got a rising trend channel there from September, gap through resistance at 10 pence, and the longer we stay above 10 pence, the greater the chance of a move to 14 pence by the end of next month, or even sooner, ideally by the end of this month. On to Pensana, and here shares making positive noises in terms of the current charting position. Here you can see that we've got this extended basing that we've had there from May last year, the top of that channel there, the target 37 pence. We're looking for that while we remain above the now rising 50 and 200-day moving averages, the 200-day line at 26. Above 26, it's 36, and then up to 50 by the end of next month. And that red resistance line projection from last year. Always worth having a look at Phoenix Copper, just on the basis that we are, in theory, waiting for a big announcement, a big funding announcement. Here we've had new lows just in the last couple of sessions, but the RSI has remained flat. So that bullish divergence may be enough to signal that we're going to have at least a rally up to filling that gap down from last month at 13.6 pence. Otherwise, it could be up to the 50-day line as high as 17 pence. But obviously, that relies on there being no fresh break below 10 pence, no fresh lows for the shares. But above 10, looking for 17 on Phoenix as a best case scenario target. Onto a requested stock, and here I am kicking myself at not looking at this before. And here you can see that Staffline has delivered a couple of our favorite signals. It was a bear trap gap reversal back in last month, so went to a new low, then gapped up and gapped through the 50-day moving average, which is now rising. We've now also gapped through the 200-day line, so and hit the initial target there, 29 pence. Well, 29 pence looking for 38 pence as soon as the end of next month, and probably the way things are going, ideally by the end of this month. Stop loss below, well, just at the floor of the gap there at 28. Moving on to Tomco, which has been almost a mission impossible in terms of the charting and probably everything else as well. Here we've got the possibility of a rising trend channel base. We've had these full storms before, or sort of flurries, 2-3 day flurries. We had one back in July last year, and obviously it was sold off after 2 or 3 sessions. But it's still worth looking at this on the basis that we have, or did get an end of day close and week close above the 200-day moving average, 0.08. Above that, looking for 0.13 or 0.14 by the end of next month. Obviously acknowledging the fact that this stock tends to be a bit of a one-day wonder situation. On to the last 3. First one is Tekcapital, where we're hoping that some of the pixie dust from Microsalt, which owns over 70%, will rub off. So far it has rubbed off quite well, but probably one would be looking for much more. And technical target here, 21 pence by the end of February, while we remain above our previous 14 pence target on Tekcapital. On to URA, where you can almost smell the emeralds, and here the shares did rather well last week with the so far this month actually, with a double gap higher, unfilled gap to the upside, V-shaped bull flag, which is one of our favorite kind of shapes, let's say, and initial target there at this resistance line projection from November, top of that triangle, around 1.9 pence, above 1.9. We're looking for 2.3 pence by the end of February, with a sharply rising 50-day moving average and a nice RSI rebound off neutral 50. Finishing off with Zanaga, which is reassuringly volatile normally, but here we've got a rising trend channel base. We have gapped through the 200-day moving average and closed above the 50-day line. All of that suggests that while we're above 7.25 pence, we could head up to the top of that rising trend channel from the end of August at 12.5 pence, which is also where the old June gap down was as well. So above 7.25, looking for up to 13 pence there. That's it for me today. More updates during the week.